Welcome back into Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Thank you very much for tuning us in here. All right, this is the last time we're going to get together. Let's take a look and see. Well, you know what we're going to do is we're going to put a cheap plug in for the Cow Guy Close, which is going to be right after this show, top of the hour. That's 1 Central, 2 Eastern. I want to see you there. We got a great thing going here, folks. I want you to be a part of it if you haven't seen it. We got 3 great guests. All of our guests are on all the other channels out there. So you want to tune it in, 1 Central, 2 Eastern. Now, I know there's still some work to be done out there. Some field work needs to be done. So if you miss it, we put it back on the radio. We put it late afternoon, early evening. So that's going to be 5 p.m. Central, 6 p.m. Eastern. But that's on Rural Radio, Sirius XM channel 147. And if you missed that one because it's dinner time, I get it. We're just trying to give it to you. So we put it back on at 2 a.m., real late at night, or early in the morning, depending what time you get up. 2 a.m. Central, 3 a.m. Eastern. And that's the Cow Guy Close. Sirius Radio, Rural Radio, channel 147. So I give you 2 places to listen. 1 place to watch. I'd rather watch. It's more fun that way, but you can listen to. But if you just stay where you're at, don't move, this show turns into the Cow Guy Close in about 15 minutes and 15 seconds from right now. All right, let's take a look at these markets. We'll go right into it and see what corn was trading on the lows. Last time we checked, it wasn't very nice. We're 427 right now, tick off the low of the day in Dees, and we've had a 7-cent range. March down 3 3/4 cents to 439 1/4, and that too is just a half cent off the low. So we're trading on the lows again. Corn, soybeans, they're down 16 3/4 cents in Jan to 10.05 1/2. We have bounced a little bit here, right? So we're only a penny and 3/4 off the low there, but 10.03 3/4 is the low. It looks as though we've got our eyes set for that $10 line. We'll see if we can stay above it going in here the last half hour of trade. March is down 17 cents to 10.18 1/4. Let's move from Chicago. Well, let's go from beans to wheat. Let's start with Chicago wheat. That's down 15 3/4 cents to 549 3/4. That's a half cent off the low there. We got March down 15 cents to 565 1/2. And that's 3 ticks off the low there. And we're working on a decent range here of almost 20 cents, folks. So that's wheat in Chicago down anywhere between, say, 15 to 15 3/4 cents across the board. Let's go to the hard red in Kansas City. 14 cents lower there. That's Dees. 545 1/2 is last. And we're only about what? Call it a penny and 1/4 off the lows. March is off 13 3/4 cents to 559 1/4. Let's go to the spring wheat real quick. 12 1/2 cents lower there in Dees to 579 1/2. March is 11 cents lower to 601 1/4. And then finally, cotton. That's going to be lower as well by 77 points. 68.92, 16 points off the low of the day. Let's bring in our next guest analyst, Mr. Ted Seifried, Zaner Ag Hedge. He's in Chicago. Ted, thanks for being on. All right. I don't know. What's top of mind to you when we look at those prices?
Well, Scott, we tried to break out to the downside yesterday, and then ended up bouncing back to unchanged, but only down like 7 cents in December Chicago. But now we are sort of following through to the downside again. And I think that a lot of it's based on the rains that we had over the weekend. Also, maybe a feeling that, I don't know, changes in policy or administration might bring us closer to an end of the Russia-Ukrainian conflict. All those things kind of considered, wheat had been poisoning itself for some sort of breakout in one direction or another. It's feeling like it's to the downside. Now, that weighs on corn as well. Also weighing on corn, and especially weighing on soybeans, is the anticipation of what the new EPA might look like. We are not thinking this is going to be a very renewable fuel standard friendly EPA. So soybean oil has been under a tremendous amount of pressure here in the last 24 hours. That's weighing on the soybean complex as a whole, but really soybeans. And again, corn is just kind of getting pulled down with it as well. So we had the friendly report that we saw specifically for soybeans at the end of last week, but now we have some other not so great news. And now it kind of leaves you kind of wondering, what other bullish news are we going to see between now and the January report, which could actually show us another reduction in yield for soybeans. But between now and then, we're sort of in a vacuum here. We'll be watching for more export sales, of course. We're watching South American weather, which at the moment looks really good. And so, yeah, do we have another bullish spark? Do we have another round of fund buying coming? And I don't know. The last couple of days kind of makes it feel like maybe not.
Yeah, I mean, I'm with you. Friday, I felt a little bit more optimistic, but boy, the sentiment sure changed. between Friday afternoon's close and going home Friday than we got going on today. We're going to go away. Stay right there. We're going to pay some bills. We're going to come back and talk more with Ted Seifried, Zaner Ag Hedge. We'll be right back right after this. All right, welcome into a Market Day Report. Let's talk about some livestock, right? Why don't we do that? This is the last time we're going to do that before the close of the day. Live cattle, I pulled that board up behind me there, 72 cents better in Dees. 184.42 is last. 45 cents from the high of the day. We're 80 cents better in the Feb to 186.17. That's live cattle. Feeder cattle, what's going on there? We're better. We've come off the highs, though. Jan's up $1.27 to 243.52. And March is up $1.67 to 241.72. And then finally, let's go to the lean hogs. Lean hogs up double nickels, 55 cents better, and that Dees contract 82.32 is last. Kind of a mixed board, though. We're unchanged in April, 89.97. All right, let's bring back in Ted Seifried, Zaner Ag Hedge. Ted, real quick, I want to go back and revisit something with you. So Lee Zeldin has been put forward for the EPA. Is he negative green energy?
Yeah, going back to a report from 2017, it seems that he is not exactly enthusiastic about the RFS, the ethanol mandate. We're worried that we could see more waivers, the small refinery blender exemptions, like we saw under Trump's first administration. So the overall tone of renewable fuel. After that announcement yesterday is really just kind of soured for the time being. Now, we could be wrong about that, but, we kind of knew this going in, that, the last time around, Trump wasn't super great for, the last EPA under Trump wasn't super enthusiastic or super great about the RFS. So that is a concern, and especially with this new appointment as well.
I don't know.
We're going to have to.
Well, could you counter that with the fact that he wants to get rid of electric vehicle mandates? I mean, that's going to be good, too, on the other side, right?
Yeah. Did that ever seem realistic, though, Scott? I mean,
nothing the government says is realistic, by the way.
So cold, right? I mean, I don't know. I'm not sure the market ever really believed we were going 100% electric. So, yeah, at some point, the argument should be made that the RFS might be unnecessary, that renewable fuels should be able to stand on their own after this amount of time.
True.
The profit margins, the added blend of octane from ethanol. But I don't know. I mean, it's really hard to say because we have such a strong big oil lobby that I don't know. Can it stand on it?
We shall see. I wanted to get that out there. Thank you very much for having that chat with me, Ted Seifried, Zaner Ag Hedge. He's in Chicago. Bring it back here one more time. Hand back over to you. But that's the question that we were talking about earlier.